The man who moves a mountain begins by carrying away small stones. Confucius. I love that quote, particularly this time of year. In the month of October, which is the month where all of the big crashes have occurred. It is a month where the markets can be very skittish and can be difficult as we're transitioning into the fall-winter trading zone. And we are seeing that. And what I love is the response I get both at the YouTube channel and the emails that I receive and the postings. And it's from the true students who are hunkered down, who are doing everything they can to learn from all of this, and the fly-by-nighters. Things aren't going well, they're not working, and I can watch and see the people who are going to make it and those who aren't going to make it. The fair weather friends who, when everything's going up and everybody's a genius because all boats are rising because the tide's coming in, great, everything's going great. But when it gets a little difficult, they back off and run away. Well, my friends, this is about staying power. Every day I bring you a saying primarily on perseverance, on willpower, on staying with it, on learning. 10 to 15 minutes a day is all we ask. And imagine how wonderful the ability would be to be able to track markets, to accurately trend follow, to make great decisions and have one wonderful practice trade after another. Now remember, we are not, quote, professional traders. We are practicing to learn how to track markets, track ETFs, track stocks. We don't have to get into the market at any time. Professional traders, people on Wall Street, they have to trade all the time. Good markets, bad markets. Sometimes when there aren't even trades there, they have to do things. They have to dump stocks. They have to do all sorts of things for clients. We don't raise a finger to do any practice trade unless a trade is there. Now, I do encourage you, when you do these practice trades, you need to go all in emotionally. In other words, you need to really emotionalize the trade like it is real. Now, you can do plenty of experimental practice trades where you're not emotionalizing that, but when you are doing a practice trade that you really believe is going to work, it needs to be emotionalized. And in order to do that, you need to really believe in what you're doing. If you can't believe in it, don't do it unless you upfront say, this is an experiment, trying to see how this is going to work. And we encourage you to experiment all the time, but you got to have two different mindsets. One's the experimental mindset. The other is the go-getter mindset. 10 to 15 minutes a day. When there is a trade, practice it. When there is not a trade, don't do it. Unless, of course, you're experimenting, trying to see if another indicator might work, another time frame, another method, an earlier jumping in point, those kinds of things, and learn from them. How do you best learn from them? Well, of course, Pearson's law. You apply that. That is, you write down what it is you're doing, what it is you're thinking as you enter the trade, as you move through the practice trade, as you close it, as you take a profit or a loss in that practice trade, and you learn from it. Okay, enough of a lesson. I do have a great lesson for you that we did put out for you today. You have to be a subscriber. It will be attached to the show notes to all of our subscribers. I very much want you to have it. It's entitled Finding Your Own Aha Moment. You'll really like it, I believe. I recorded it today. It'll be there in the show notes for subscribers at chartingwealth.com. And again, we do appreciate everyone signing up. Also, at YouTube, just click the subscriber button to the right. If you're listening, if you're watching the video, if you're listening to the audio, then of course, please do subscribe at chartingwealth.com so that you get all the special trainings as we put them out on a daily basis. Now, let's jump into these charts, see what there is to see. We see the S&P 500 down 0.61% for the day. when we look at the trend as far as the price percent oscillator goes, it's trying to move up a little bit toward the red signal line. Derivative oscillator's already turned positive. We have a green up candle with a wick on top. I don't know how many people believe much in that up candle, but that's what's forming. However, the overall sentiment is still negative because the price percent oscillator is negative. What do we see on that 2-day chart? It did not manage to cross over going up, representing both Tuesday and Wednesday. Just couldn't do it. It is an up candle, did reach a higher high, but not enough energy to cross over. What does that mean? Does it mean it's going to bound off? No, it could cross over in the coming 2 days, but we're going to keep our eye on things. Price percent oscillator is still negative. That's something to pay attention to also. What's the 4-hour chart showing us? Well, the price percent oscillator actually maxed back on the morning of Tuesday, and we've seen a sideways slide since then. Red candle spinning top in the morning and almost a doji in the afternoon. Indecision tending down. Derivative oscillators losing energy. Price percent oscillator still positive, but losing energy. Pay attention. See what there is to see. Remember, the overall mood of the S&P 500 on the largest chart is down. Keep that in mind. Let's see if there is a crossover going down and a potential jumping in point for a down trade. We'll wait and see what there is to see. Let the trend be your friend. Okay, going from the S&P 500 to the NASDAQ 100, what do we see there? We see the NASDAQ 100 was down 0.25% for the day. And we see that the price percent oscillator is getting, again, trying to get closer. It's going up toward the red signal line. Hasn't crossed. It's a big green up candle. Again, hasn't peaked as high as it did back on Friday, the 13th of September. Derivative oscillator is positive. Still, though, the price percent oscillator is negative. Hasn't crossed yet. We go to the 2-day chart. We can see that the latest 2-day candle reached a higher high both in the candle body and the wick. And of course, there was a crossover. We talked about that potentially happening. Of course, the candles finished drawing. Now we will make it real by going ahead and moving the 2-day crossover over. And we're going to change the candlestick to, we're going to change the arrow to an up arrow. So right now, we have the 2-day chart actually moving up, whereas the weekly chart is moving down. What does that tell us? Well, it tells us that at this point, we do not have a trade. So we will just continue to watch and see what there is to see and how the NASDAQ 100 sorts itself out. We go to the 4-hour chart. It again looks like it's sort of peaking like the S&P 500 was. Reached its high, though, a little later, back on the afternoon of Tuesday, and then sideways on Wednesday. So again, we'll continue to watch, see what there is to see, but we don't have a practice trade coming up on the Qs. Let's move on to 20-year bonds. What do we see there? Red down candle for the week. As we've noticed, it has not reached a lower low than it did all the way back on Friday, the 13th of September. Derivative oscillator, however, still heading down. Price percent oscillator heading down at about the same angle it was in the prior week that ended in a doji. So again, the overall mood of bonds is down. We go to the 2-day chart. We can see that it did reach a lower low on the latest 2-day candle, and the candle body was actually a lower low. Price percent oscillator heading down. Derivative oscillator gaining downward momentum. And again, we go to the 4-hour chart. Down in the morning, bit of a recovery in the afternoon, like we said, up just a little bit for the day, 0.12%. So again, those of you who are in that trade, since we had the crossover back on the 9th, in the afternoon was a jumping in point around 143.50. I'm sorry, let's see. Around 144.50. So what we are looking for is, again, where is the jumping out point going to be? Some of you jumped out, of course, in that trade after it bottomed back on Friday. Others stayed in through that Monday bump up and then have continued to watch it go down. So watch, pay attention. do pull the trigger on taking your virtual profit based upon the percentage you put in or the other triggers you have. That may be a 2-day crossover on the trend. That may be pullbacks on the 2-day, the weekly, just whatever it is you have set up to get you out of that trade to take your profit. Now, again, when we look at the 2-day, still looking nice and strong. We look at the weekly, still looking nice and strong. So again, pay attention to those things. And it's never a problem to pull the trigger and take a profit, or to take a profit in your practice trade of half of what it is you have in there. However you set up your triggers when you enter your good till canceled sell order on your practice trade when you enter it originally. That's what we teach. You want to know more about what we do? Please purchase our book. We are having the printer is actually printing as I speak, the 13th printing of the book. I know we're getting orders in, and as soon as we get those in later this week, those orders will be fulfilled. You can be in line to get an autographed copy. Follow the link in your show notes. So go back to the weekly chart, and we're going to finish up as we always do with gold. Gold up 0.57% for the day. We look like we're moving into the third week of down movements in gold. Again, another thing important to notice is that gold actually hit its bottom back on the week ending, most recently the week ending the 4th of October. Red spinning top last week. So far this week, we do have a red down candle with a wick on the bottom, but that wick's not hitting a lower low. The candle body is. That's good. Derivative oscillator gaining downward momentum. Price percent oscillator heading down. We go to the 2-day chart, and we see that we have this is a cautionary candle for continued down movement. It's a green, solid green candle. Doesn't have a wick on top. Has a wick on the bottom. And again, that wick is not going lower than the prior 2-day candle. Price percent oscillator, however, still heading down. Derivative oscillators gaining downward momentum. We go to that 4-hour chart, and we do see things bouncing off. Now, of course, we had that crossover and the jumping in point there in the afternoon on Friday for a practice trade. Went up Monday, down Tuesday, going up Wednesday. Again, pay attention to where it is you jumped in. Of course, what your out points are, what you set up originally when you got into the trade for that down move, if you're practice trading it. And also continue to watch that 2-day chart very closely. Continue to watch that weekly chart very closely. We'll see what's going to shake out with gold. Again, it is a strange market at this point. But so far, that TLT trade has been the best that we have had here lately. It is not an easy market. Anybody who tells you it is doesn't know what they're talking about. It is a difficult trading market right now with all sorts of weird things going on. But guess what? It's the best time ever to practice. The more difficult it is, the harder it is, the more you're going to learn. When the tide comes in and all the boats go up, nobody's doing anything necessarily right. So again, use this time to practice. Use this time to learn. 10 to 15 minutes a day is all we ask. Those who gut it out will reap the rewards. God bless my friends. All the best from the whole team here at Charting Wealth World Headquarters.